All right, let's talk a bit about Saab. So this is a Swedish defense contractor, an arms manufacturer, and a very, you know, as a Swede, I'm very proud of this company. We have their airplanes as backgrounds on our phones, some of us. The JAS Gripen, absolutely beautiful aircraft. They have submarines coming from Kochum, very famous contract recently here with Poland for 30 billion Swedish krona, so roughly. And we can see the market cap of this company being 340 billion Swedish krona. So divide by roughly 10 to get dollars. It's a little bit more right now. The dollar has been sliding. So we're going to hear about that in the earnings call as well, because I think that a perfect way to take a look at this company is to watch the most recent earnings call. I did some research on YouTube as well. There was some AI summaries and there was a whole bunch of technical analysis, which I'm not a big fan of. Let's do some more fundamental, and let's pause a bit in the earnings call to talk about specific important numbers in this case, because we need to put all the information that you're about to get into relation to the financial valuation metrics that we see for this company. So right now, price to earnings, remember, it's a trailing multiple. Value investors really get caught up on this all the time. I think perhaps in the case of Saab, it's more prudent to just take the most recent quarter and then actually annualize it to get a fairer picture of where the company stands in terms of valuation, because they have been growing rapidly, and as we will see in the earnings call in a little bit, amazing intro also, by the way, on the earnings call, but we see that the backlog is really putting the foundation for future growth in this company. And if you catch the hidden little secrets when Anna talk about the financials, we can see a lot of investments being done as well. And well, that's also a foundation for future growth. So without further ado, let's take a quick look here at Saab earnings calls, and hopefully OBS is able to pick up the audio nicely in this case.
Good morning, everyone, and welcome to the presentation of Saab's fourth quarter and full year report for 2025. My name is Johan Andersson, responsible for investor relations, and I will be the moderator here today. With me here in Stockholm, I have our CEO, Michael Johansson, and our CFO, Anna Vikander. Michael and Anna will present the report, and then thereafter we will conclude with a Q&A session. And just to remind you, you can either ask your questions over the phone or you can write them in the web interface. So with that, warm welcome, and I'll leave it over to you, Michael.
Thank you, Johan, and also a warm welcome from my side, and thank you for joining us today. I will start by jumping right into sort of the perspective of last year, looking at how we met sort of our guidance and our growth perspective. So we ended up with almost 80 billion in organic growth, 79.1, which was excellent, 25% organic growth. And then also had a very good development on our operating income, of course, growth 37%. And the cash flow was extremely good in the quarter, the last quarter last year. So we ended up all in all at 5.3%. So we had an extremely good
All right, so just pausing for some quick commentary. We see sales growth 25.6%, and then we see that's the top line, obviously, and then we see the bottom line expanding more than the top line. So the unit economics are improving. We will see greater EBITDA, And this is a fantastic sign for the company going forward, meaning that they perhaps can sell at higher prices or that they have good cost control. We get a hint already here.
Last year, meeting all our expectations, and it is of course based on very good sort of delivery capabilities and how we actually performed in delivering to our customers over the year, and showing that our capacity investments that we have comes into play. Going forward and looking at some highlights, obviously looking at the extremely high order intake in Q4, but also over the year, we see a high customer demand in market, and there's very many initiatives that we're working, of course, and the product contracts continue to grow, but also we have a strong interest on the sort of bigger platform side, and that's why the balance of the large orders towards the medium-sized orders and the smaller orders have changed a bit. So we still see, of course, volatility in the geopolitical tensions around the world, as you all know. But I would say what's dominating the growth right now from our perspective is still that the European nations and the pillar of NATO, the European pillar of NATO, has to sort of expand the capabilities, also quite clearly stated by the US, that we have to take responsibility for our own continent when it comes to the threat environment. So that is driving, of course, lots of spendings in Europe, but not only, to look forward to future growth. And that drives mainly the growth for us, I would say. So we have a record order bookings, as I've said, and a very high backlog of 275 billion in Swedish crowns. Now, a big thing that happened.
So as I keep saying, this order backlog is a leading indicator on revenue. So we see this big backlog, they can't realize it in terms of GAAP principles, accounting principles, all right? They need to actually deliver the product to the person that bought it for it to be revenue on the balance sheet. So fantastic leading indicator in terms of future revenue growth. That's how to interpret this as investors.
During the quarter, of course, was the selection by Poland for the A26 submarines, and that is extremely important to us, and we really appreciate that. And it will be good for our security policy between the countries, the Baltic Sea protection, of course, and a close collaboration between Sweden and Poland, but also between industries between Sweden and Poland. Now we are diligently working that contract, of course. It's not a contract yet, but I really look forward to finalizing that contract sort of during this year. And then, of course, we have shown that we are capable in extending our capacity and expanding that. All the time we get new capacity expansions in play to support our growth. But there's still much more to do, of course, both when it comes to facilities and factories that will come into play. We have a US factory that will be up and running late this year, and we also have an Indian factory, as examples, coming into play next year. So those are a few highlights. Coming back to the market position and looking at what I tried to sort of describe on a very high level, that the mix of the product side of Saab, the portfolio, we are very well positioned in the marketplace, I would say, and I'm really grateful that we have a portfolio consisting of both sort of products, but also platforms, and also being able to integrate systems together. So, of course, looking at last year, a few very important parts or contracts that happened was, of course, the Gripen to Colombia, 3.1 billion euros, that we are now executing, of course, according to plan. And then we have the Global Eye that came in very late last year, which was really a good win, of course, the 2 Global Eyes to France. And then the contract in Q4 also on the A26 submarines for Sweden, the extending capabilities that added to that contract. But also things like the electronic warfare capacity for the German Eurofighter is a very important contract to us. And then, as I said, product contracts on the missile side and the support weapon side is adding to an excellent sort of year for us when it comes to order intakes. Order bookings of 169 billion in 2025, and a really good outlook, I think, going forward also because of the market interest that we have. Coming back to the last quarter then, 25, the fourth quarter, of course, we have all noticed a fantastic order intake of 100 billion in the last quarter, which is then a mix of large contracts with many good product contracts as well. So an extreme increase, of course, from the 17 billion we had in the Q4 of 2024. An extremely good quarter.
All right, remember what I said about the price to earnings ratio. It was dependent on a growth for the full year of 20% but looking quarter over quarter, in this case, we're seeing this 35% increase. So that's why it makes more sense to just take the last quarter and annualize it in this case. And value investors are absolutely gonna hate this. They are hung up on price to earnings for some reason. I can't for the life of me understand why. They hate on it for Palantir, for software companies, and also in the case of Saab, I see on commentary online that oh, it's a bit overvalued, and then they look at that trailing metric. Well, look at Q4, look at these numbers, and tell me again how it doesn't make sense.
Ever, of course, but also the sales growth, 35% organic growth, is really good, including also the EBIT growth of 50%. And then, as I said, the volatility in the operational cash flow side is over the year is quite sort of big. So of course we had an extremely good fourth quarter to generate the 5.3 over the year, 6.3 billion. And as we've said all the time, we promise good operational positive cash flow, but over the year it will vary a lot, of course. So this is absolutely the best quarter I think that Saab has ever generated, not only the best Q4, but the best quarter ever. So I'm really pleased with that, of course. A few comments on the different business areas then. For Aeronautics, the Colombia contract was really the big event, of course, another contract on the Gripen E. So now we have 3 countries and we're increasing capacity down to deliver all these Gripen E fighters. And we have a number of campaigns going forward also, a big interest in the market. So this is an area that is now growing for us going forward. And we are also looking into the next gen fighter capability. But I think in the beginning we will work to complement a Gripen E fighter with a collaborative combat aircraft, a sophisticated, you can call it a loyal wingman, and autonomous systems. And that I think is the sort of the first thing that will happen in the future fighter sort of avenue that we're running. We have also the T7 and the first.
Just a quick pause here. If any Saab representatives watching, you need a new sales guy for Brazil for a delivery of these amazing Gripen airplanes, Send this guy a DM if I'm ever to be a field rep sales. Very happy, living on the millions, relaxing and doing inside sales. But if I'm ever gonna do field sales, well, I would want to sell JAS Gripen airplanes. And we're gonna get into Anna here in a little bit, and I'm gonna pause when she shows cash flows because it ties back to something that the CEO said here earlier on the call. Quite interesting. We will discuss the implications.
One is now with Randolph Air Base. Now they are using it to start sort of creating the training for the pilots, but it's still many to deliver, and we're still sort of affected by the under absorption that we have in the facilities in West Lafayette, Indiana, and that will be continuing for a couple of years more, I would say. So that is going to be a good business for us, but we need to ramp up the deliveries, and we have only delivered a few so far of the 350 that we have on contract. And then a very important thing that happened, of course, that we're working diligently to sort of organize a contract around this, and this is a government to government and industry to industry initiative, I would say, was from the letter of intent that was signed between Sweden and Ukraine regarding fighter capabilities going forward. So of course we would like to see Ukraine flying the Gripens going forward, but we're working that, and we hope that the financing side of that will be sorted, and also for us then to prepare for industrial collaboration, but also capacity increases. Dynamics still has a very strong demand in the market for their entire portfolio, I would say, from training simulation to camouflage net, but not the least from the missile and ground combat perspective. So we have had quite a few large missile and ground combat orders in the quarter. So they have an amazing order backlog of 90 billion, and this is also an area where we have invested heavily to increase capacity to deliver to our customers. There are more to come into play, as I said in the beginning, in both India and the US, but we have also already taken some.
Speaking of some deliveries to the US and India, it ties back to the investments made. I'm going to comment more on it a little bit later, but just wanted to pause and point out the beauty of what looks to be the Carl Gustav grenade launcher, so named after a Swedish king, certainly has my approval. A very sleek design, very beautiful, and happy to see it's selling well. 50% year-over-year growth comparing quarter to quarter. Very strong growth in this segment and also in the surveillance segment, whereas the slower growth came in the submarine segment, but we're gonna see this in detail. One of the reasons why I show this earnings call, it's quite apparent to most of you by now, but I think it's done extremely well. It's a high quality production compared to a lot of the earnings calls, especially for REITs that I look at on a quarter by quarter basis. And I think in terms of generating interest for actually looking at earnings reports and learning this stuff for yourself, companies like Saab does a great job at making this exciting. So if you're trying to get more into investments, well, perhaps start by taking a look at some of these more exciting earnings reports, because the standard is very high.
capacity increases into operations, I would say, and we are booming our expansion also in Sweden, of course. So this looks very good, and they had a growth of 50% quarter to quarter over the year, so that's an amazing result. Surveillance did have a very good quarter. I mentioned the Global Eye from France from a market and order intake perspectives, but also strong demand when it comes to our EW equipment, our sensors, the Giraffe 1X, our fire control sights for the CV90s, but also other sensors, the weapon locating radars, Arthurs. And they are picking up on the project execution, and we see a substantial growth also here quarter to quarter of about 50%. And we just want to mention that we have now divested completely Transpondetech, which affected the EBIT of the operational income of surveillance by 336 million. But even without that, they did a 10% result during the quarter. So that was a very good step for surveillance. Kockums was, of course, extremely happy, and so am I, on the selection by Poland. So now we are expanding capacity to build more submarines. And we have other segments, of course, in the underwater business, which is autonomous systems and a number of things in that area that has a high customer interest. And then, of course, we are working on the campaign to be part of the new Swedish frigates or corvettes, but I don't know exactly when that decision will be made. We have a partnership with Babcock, and of course that is something that we work diligently on the surface side going forward. But we have a growth, very good growth also in Saab Kockums of 20% and good project execution. And of course, also the Swedish A26 contract was important here. So they are developing in a very, very good way as well. And lastly, we have Combitech, good momentum. Of course, the total defense perspective and how many things are happening in that area in Sweden now from an industry, from an agency perspective, is supporting the growth of Combitech. The new agency, MCF, the Swedish, and also on the civil aviation side, generates lots of business for Combitech, and they are good in this area, both from a cybersecurity perspective, but also how you set up resiliency in an organization. So that is, of course, the growth is driven by increased number of consultants, but they are growing in a very nice way, and they are now a 5 billion entity within Saab, which is absolutely fantastic. And they're really important for Saab as well, since they have a number of very important participations in our contracts within the Saab business areas as well. A couple of comments on the sustainability side. We have done a number of important things during the quarter. We have adopted formally now a human rights due diligence policy, supporting our responsible sales policy. This is something that generates a due diligence every time we do a contract with someone and sell something. We actually go through in detail that we're not affecting anything when it comes to climate and water. We're in the highest ranking of 4% of the companies right now, which I'm impressed, and I'm really pleased with that development. So I think with that, I will hand over to Anna to go through the numbers in a little bit more detail.
Thank you, Michael, and good morning, everyone, from my side as well. Yes, it's clear that we have closed yet another successful year, and I will soon go into the details of the financials in the quarter. But before doing that, I would like to take the opportunity to show you some trends on what we have achieved so far. So let's start looking at our graphs and what we have achieved for sales growth. We are growing the company substantially, and during the last 3 years, we have grown in average 24%. And what's so good to see is that we have had double-digit growth in all our business areas during this period. And that is achieved, of course, through our strong offering and our strong portfolio that we have, but also our operation and our ability to grow our operation. And an important factor to that is that we also have increased the number of employees by around 10,000 people, now adding up to the 28,000 employees that we are today. And we have a
Just a quick pause once again. So if you're considering investing into this company, take a look at the guidance, take a look at the forecast, take a look at these sales numbers and these profitability numbers in terms of EBIT. Would you be happy if this materialized, or do you think that the stock is priced too high? Only you can make that decision. The market makes that decision every day when it's trading at the current stock price, but only you know if you're happy, paying for what you get. And as of right now, as of the best knowledge of the management, this is what they predict that you as an investor might get from Saab.
Really strong company culture where we have a good focus on both delivering on our commitment, but also building the company in the future. The EBIT has also grown in this period by 33% compounded average growth rate. And that really shows that we are leveraging and scaling on our growth, growing more the EBIT more than we grow our sales growth in average. And we should remember that during this period, we have invested substantially, both in R&D and in capacity investments. So over this period, we have doubled our R&D, and we are actually tripled our capex. Now, look into the quarter then more in detail. We have increased the EBIT by 50% this quarter. I think one should remember that that is an exceptionally strong quarter, and that is, of course, largely driven by our sales growth. And what's also visible in this slide is that we have a volatility when it comes between quarters. That is really reflected here in this slide. This quarter, I want to highlight dynamics. Here, the EBIT grow by 19%. although the margin is a bit lower compared to what it was last year in Q4, and that is primarily related to product mix within Dynamics when comparing year-over-year. But if you look at the trend for Dynamics, it's very strong for the year. The EBIT growth was 46%, and the EBIT margin for the full year was 18.1%, an increase from last year as well. Also, Surveillance is worth mentioning this quarter with a growth of EBIT of 83%, and that was very much driven by high project execution and several deliveries in the fourth quarter. In addition to that, we had a positive effect when we received the order for the GlobalEye France contract at the last days of December, since we, in that project, had started some activities already when we got the letter of intent in the summer. Can also mention that we had this divestment of Transpondetect that is visible in the numbers of Surveillance, but it's excluded here in the figure that you see for the EBIT for the quarter. For the full year then, the financial summary, we grow our sales with 24.1% reported, organically 25.6% impacted by currency, so 79 billion in sales. Good growth also in gross income, and EBIT was growing 37%, and we ended up with 9.8% EBIT compared to 8.9% last year. That was mainly driven by Dynamics and Surveillance. Another thing to point out here in this slide is the financial net that improves substantially compared to last year. And here we have a positive impact this year from the SEK appreciation, where the revaluation of our tender portfolio from currency hedge in the tender portfolio had a positive impact this year. Last year it was negative. So that's why we have a big swing there in the financial net. Also good, the net income and the EPS grow by 51% over the year.
Just a casual 51% growth in earnings per share. Just very, very amazing numbers, and certainly warrants a higher valuation, in my opinion, when you look at numbers like that. Soon we're gonna see the investment and R&D part as well.
We have talked about the cash flow. Michael talked about the cash flow. It was very strong in the fourth quarter, where we both had several deliveries and received a lot of customer milestone payments. As we can see on the slide, we have the cash flow from operations now amount to 12 billion approximately, and we have increased our investments, so they are now 7.2 billion this year. If you compare to last year, they were 4.8 billion. So all in all, we achieved a cash conversion this year of 68%, which is well above our midterm targets. And also our return on capital employed increased to 16.5% this year.
Just gonna pause real quick in case she moves forward from this slide, because I think this slide warrants a little bit of explanation, and it ties perfectly back to something that the CEO mentioned earlier. We see this amazing cash flow from operations. We see obviously an effect here in terms of a slight increase in working capital. What does this mean if you're new to investing? Well, perhaps they buy more raw material that's needed in arms manufacturing, keep it in storage, so they are buying more components perhaps that's needed in this manufacturing. So just expanding the warehousing perhaps. That could be one reason. So this is just capital used purely, in the operations that's very much needed. And depending on the business, this can tie up more or less capital. It's one of the reasons why software is so beloved. You just don't really have a cost in terms of selling additional units. You do the R&D once, and then you just keep selling it at almost pure profit, like CD-ROMs back in the day cost basically nothing, and then all the value is in the software. Well, when you're an arms manufacturer, you actually need materials, and that means that working capital is going to change from quarter to quarter. We also see investments taking up a massive part, and for those of you with keen ears, remember the CEO talked about a new factory in United States and one in India. Could be excellent way to secure future contracts, to avoid perhaps future tariffs. You never know what happens here in the second or third or fourth, or if it becomes a fifth term of the orange man in office. You never know. And having manufacturing on site in America will just make it easier to have access to that market as well. Huge market, massive spend on military. across the pond here from Europe. But then obviously, as we saw clearly in the numbers, clearly being mentioned, stated, massive impact from increased demand in the Eurozone, as well as we are forced to meet certain defense obligations. So in terms of investments, just think about it as a new factory in the United States, new factory in India, and in my opinion, this is very much needed to meet that future demand. As of now, demand looks amazing, obviously. It could pose a future risk if this cycle changes and all of a sudden we see world peace. I highly doubt that, but if that were to be the case, well, you have invested, you have built out capacity, and then if that sits unused, we won't see this amazing return on equity. But as I said, I highly doubt it, and from an investor perspective, I think that this is a very prudent move to spend this now to secure future growth and profitability. That's what they're doing, in my opinion.
So driven also by this strong cash flow, the net cash position and has improved this quarter, and we're ending up the year with 4 billion in net liquidity. So our balance sheet continue to be strong, and we have a cash and liquid investments amounting to 18.7 billion. And adding to that, we have an unutilized revolving credit of 6 billion as well. So following this strong financial performance or financial position, the board of directors will propose to the annual general meeting that we increase our dividend by 20%, amounting to 2.40 SEK per share. So let's again zoom out a bit and look at some trends on what we have achieved so far, 23 to 27. Cumulative over these first 3 years, we have delivered cash flow before operation of 26.4 billion Swedish crowns. That is a strong enabler for us, that we have been able to invest more in capacity expansions, and which is important for our foundation, growing our company, as we know, investing in new capabilities, new facilities, new production sites, and new products. And in total, over these years, we have had investments amounting to 15.5 billion. And measuring of the period, we have achieved a cash conversion of 62% so far, and generated approximately 11 billion in operational cash flow for our company. Another parameter that has strengthened this quarter is our backlog. We had a strong order intake this year, 169 billion on the year, and 100 billion this fourth quarter. So we have built a substantial order backlog to deliver from going forward. And compared to last year, we have extended both the duration of the backlog for the years to come, but also increased the backlog for the closest years, 26 and 27. So it increased 29% for 26 and 46% 27. So this really gives us a good comfort for future growth and a good foundation for growing the company within the years to come. And finally, just look at the trend of the backlog that has been strong. The growth has been strong over the last years, amounts now to 275 billion, and corresponds to 3.5 times our sales that we had 2025. So this is really supporting our long-term growth. So by that, I hand over to you again, Michael, to guide us through the...
So before we go into guidance, just remember that backlog slide makes a lot of sense to grow out capacity, to be able to deliver on that and turn it from being a leading indicator into actual revenue. Deliver the product, realize revenue, and perhaps we see another 20% increase in dividend very, very soon for this company.
Midterm targets.
Thank you so much, Anna. And yeah, coming back then to our medium-term targets, I mean, one has to reflect a bit upon that. This is our way of measuring progress over time, of course, and our best assessment of how this business will evolve over time. And we have performed really well, as you know. Anna mentioned we have had 24% in average growth over the period of 23 to 25, and as I will show shortly, we are increasing our now target to 22% in average over the period of 23 to 27. We think we have a very strategically positioned portfolio, of course, that is fitting the market demand in a very good way. And now when we see the product offering growing and the contracting order intake on that side growing, in combination with the better performance on the platform side, even though I recognize the fact that many of these sort of campaigns are not only about the great offering that we have, but also political decision, I think we have a very good position having both in our company. And we have shown now during the last few years that we are able to ramp up both from sort of increasing our company in terms of great employees supporting us, and we have a very attractive company to come and work for, but also our capacity increases when it comes to production and getting a lot of the backlog sort of delivered to our customers, which is incredibly important. We will continue to invest and never compromise sort of anything that has to do with the future when it comes to R&D and new capabilities, embracing new technologies, and continue to expand capacity, of course. So we will continue to invest to make sure that we can meet this market demand. And now also going into the target upgrade that I will show you, we of course, as Anna showed just shortly before, we have a record order backlog of 275 billion, which has now also increased in terms of how that is spread over the years. So all in all, this is a very good position that has led us to going from a previous target perspective of 18% average growth over the period 23 to 27. We have upgraded that now to 22%, quite a step for the full period up until 27, which implies then, of course, that we will generate roughly 20% average over the next 2 coming years, including 26 and 27. We continue to reiterate our targets of growing our EBIT more than the sales growth, and we also continue to reiterate our target of having a good cash conversion of more than 60%, despite all the investments that we are doing now and going forward. So that's a good sort of sign of that things looks very good going forward, and from that I am pleased to take questions.
Alright, so I will spare you the Q&A. Some questions were excellent, some questions were less excellent, just asking for more guidance in terms of how the product mix will look like. Very difficult for the CEO to predict that. They obviously have pipeline, and you never really know exactly how the pipeline is going to convert from the salespeople. We put stuff in Salesforce and it's not always accurate. Not saying that Saab uses Salesforce, obviously have no idea what CRM they use and how they track the accuracy of the data within that system. But in terms of the CEO reiterating the result, he's basically talking about expanding, using these investments to be able to meet capacity. All in all, just very common sense and sound practices in terms of where they are guiding the business going forward. So in terms of where I see this company going into the future, I think that we can expect a higher trailing price to earnings going forward, more of a premium valuation still, and this is obviously because of that large backlog, so it makes sense. And as they expand, as they realize revenue, as they mature more, this will obviously go down a bit, more in line with the average market price to earnings, but it will remain higher in the short and the midterm because of this high growth. Only makes sense to me. And obviously once they become a bit larger, have built out the capacity, this will go down most likely. But for now, this is going to stay higher for a bit longer. Will be very interesting to follow along on the Saab growth story, adding 10,000 new employees in the year, continuing strong delivery across all of the product mixes. Although from an investor perspective, I think the most impressive one was the surveillance segment due to the high bottom line profitability in that segment specifically. Whereas in terms of the submarine, it was less impressive in terms of unit economics. So keep that in mind if you're taking the Polish large 30 billion submarine order into account when you value this company and think, all right, how will the future performance be? Anyways, I really hope you enjoyed this earnings call listening in. I think it was interesting, I think it was well made, and I think that they gave us very good guidance for the future and how to look at and how to value Saab stock. That's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.